Welcome back to another installment of this Futures Trading Accelerator series. So in today's video, I'm going to be talking about what are take profits and what are stop losses, and how you can identify the best place to put your stop loss and the best place to put your take profit. So first of all, a stop loss. What a stop loss is let's say that you bought here at 42.50 on ES and you would set a stop loss. So if you, let me go to the active trader. So if you bought, let's just say 42.70, buy 42.70, and then you would set a stop loss. Let's say you wanted it to be 5 points. Set a stop loss. You can see says right there, sell -1 stop at 42.65, and this would be a market stop order. So if price comes down and trades at 42.65, then the broker would send a sell order at market and get you out of that position relatively close to that price. If you use a stop limit, it won't guarantee that you get filled there. It could possibly skip over your stop price. So it's not, you can't really win exactly. I do think that stop markets are all right. But there is nothing better than using a limit order that can control price. So that is for a stop loss. Basically just gets you out, and you can mitigate your risk. And then so there's a thing called a mental stop loss. What is a mental stop loss? Let's say that you buy right now, right? Just buy market, get in, get filled. You wouldn't actually set a hard stop loss, like actually clicking the button and have a resting order at whatever price your stop loss is at. You would just have an idea, okay, if price gets out, or if price trades at 42.65, I'll get out. I will press, I'll buy, I'll be in, and then if it gets to 42.65, I'll sell. Now, the tricky part about this is that I would not recommend this to beginners, because you have to trust yourself to get out when it gets to 42.65. And it is very, very tough, because I remember I would do this as a beginner. I'd get in, it would trade down here, it might bounce up to 42.66, 67, and then I would think, oh, cool, I didn't get stopped out. I think it's going to keep going back up. And then it would go back down, 42.65, and I would think, oh, it's going to go back up. No need to worry. And then it would go down below. Now it's a point past my stop loss. Now it's 2 points, 3 points. And at this point, you're way past your max daily loss limit, and things are just not looking good. And now you have to make a decision to get out at a almost double amount of what your stop loss limit would be, or keep holding and possibly dig yourself in a way deeper hole. So that is why a mental stop loss is very, very tricky for beginners. Now, if you've been trading for a while and you can trust yourself, especially in this kind of a stressful situation, to get yourself out and manage your risk, then awesome, perfect. I would probably advise to use a mental stop loss, because market makers can see your resting orders, and they will just push price to wherever they need to stop you out, get filled, and then push price to wherever they need to fill you, or to trade the market after that. So that is why I trade with a mental stop loss. So now, what is a take profit? Take profit, let's say you buy, boom, you're filled. Now I can set a sell order at, let's say, 42.80. So if price comes up and trades at 42.80, boom, then I would get filled, and the broker would send in a order to fill me at 42.80. So super, super simple what a stop loss and take profit is. I mean, it's very, very basic. There's really nothing else that you guys need to know as far as what they are. Now, if you want to know what the best places to put them is, first of all, avoid putting a stop loss exactly at a, key level or a round number, right? Like 42.50. If price is coming down like this, let's say you buy at 42.55, do not put your stop loss. If you have to go in half size so that your stop loss can maybe now be at 42.45, yes, in this scenario, would have gotten stopped out, whatever. Okay? There's probably not even confirmation to be buying here anyways, but if you have to size down and, double your stop loss, width to, let's say, 10 points instead of 5 and just decrease your size in half so that it's not, you're going to get stopped out at 42.50 at key level, then do that, because you're just going to save yourself the just super easy cheap shots that market makers will do and just push price to a key level, like let's say in this scenario 42.50, and then price will come down, trade, boom, reverse, and you would have gotten stopped out basically perfectly at a key level. And also, don't buy exactly at key levels. I also used to do this exact same thing, and time again, I would just get stopped out basically at the bottom. So the average stop loss for ES is around 5 to 6 points. You can see that right here when you see that the key level of 42.50, and then you see this low, 42, basically 43, so 7 points. So if you would have bought at 42.50, stop loss at 42.45, you basically would have gotten stopped out at the bottom. Right? So avoid also buying exactly at key levels, right? Never set an order for 42.50 or 4,200 or 4,000 or 3,900 or whatever, right? Never do that, because market makers, again, know that the average trader is going to be buying at a key level like 42.50, stop loss 42.45, and they're just going to run that all day like they did right here. Push price down, boom, stop everyone out, take price up, boom, stop everyone out again, and then rallies on upwards, right? So avoid buying and creating a lot of activity with your stop losses at key levels. Now, a take profit at a key level is fine, because again, key levels are magnets. Having a take profit where you'll make money if you buy at 42.50 and let's say 42.75 is a key level in this scenario, if you set a take profit here, well, great, because that price level is going to act as a magnet, so price will get pushed up to there, most likely. So that is what you would want to do. And also, avoid putting a stop loss below a super critical key level, right? So you can see right here, we had 1, 2, 3, and then, maybe 4 or 5 wicks right here. The price was getting held up at 42.60, 42.60, 42.62.5. Buyers kept bidding that up, defending this level, and then eventually buyers just gave up, sellers got aggressive and pushed price down. If you bought at 42.62 and you put your stop loss just barely under here, you're going to just get hunted by market makers. This is one of the most obvious places to put your stop loss. Now, what should you do in this scenario? If you are going to try and buy off of, let's say, 42.62, because in some scenarios, price wouldn't break here. Buyers would just keep defending this area, and then sellers would give up, and now price would push on upwards. So what you should do is, again, just increase your stop, but size down, right? If we see that 42.60, right, if the chart's looking like this, there's the possibility that price is going to go up. And if you are long right here, I mean, where would you put your stop? Right under here. Now, again, there's no guarantee that, you know, the trade scenario wouldn't work out. And even if you put it all the way down here at 42.40, that wouldn't also get triggered. Of course, it's trading. Anything can happen. But just on the average trade, put your stop in an area where it would just be kind of random, right? Like maybe 42.52. Or if we go to yesterday and price is going on up, right? Maybe you buy off of VWAP here, put your stop loss maybe at 42, maybe a tick or two under 42.25. Because if price has to break 42.30 and then keep on trading down and then break 42.25, that would mean that bears are in complete control here, right? If price gets taken down below this key level and this key level and this, bears are in control, right? So again, you want to put your stop losses. Stop losses are the most important thing to, try to become a sniper and an expert at. Take profits. Honestly, don't even use them. I mean, I'm not saying not to use them. I'm just kind of joking around here, but take profits. Put your take profit as high as humanly possible. I mean, of course, yeah, you'll need to have a general idea of how high price can go. And, in this case, you could target high of day or this imbalance, maybe 42.65, right? Stuff like that. And again, just the more you trade, the more that you'll just know how price is moving, and you'll know where to set your stop losses and take profits and how high, the market could possibly run. But setting a stop loss and trying to really cherry pick a good price and get the best fill so you can put your stop loss as low as possible, that is the main focus, right? Because again, take profits, market can run anywhere, right? You don't want to just sell out at 10 points if the market can go and is showing signs of a 20-point rally or a 30-point rally. Try to catch all of it, right? Try to catch all of it. But you literally just need to be a professional risk manager and set your stop losses in really good areas and just focus on that. Because as long as your stop loss doesn't get hit, you're able now to work the trade. And now let's say, that you bought off of 42, somewhere in this candle, right? You bought off, let's say 42.50, right? Some breakout of this high of this candle, right? Now if you're in the trade, and now if you're looking in prices like that, well, okay, now that is showing like a pretty darn good reversal. So let me just hold on. Maybe I'll move my stop up to some, number between here and let the trade work. And in this scenario, you could have captured essentially another 5-10 points, and that adds up. So I hope you guys learned what a take profit, stop loss is, and where to set them. Again, trading, there's no 100% magical way to know exactly where to set a stop loss so it doesn't get triggered. It's going to happen 40-30% of the trades that you take, right? So basically 1 out of every 3 trades is going to essentially get stopped out on, right? 1 out of every 3. Okay, 1 out of every 3 essentially is going to get stopped out on. So you just need to focus on the best possible areas to just not put your stop loss, and that'll automatically increase the probability that you won't get stopped out, and that is what is most important. I cannot tell you how many times I've been in a great trade and get stopped out just a little bit too early, right? Stopped out just a little bit too early, and then the market does something, either pumps or dumps, and I could have had a really nice trade, but I just got filled at a worse price, couldn't put my stop loss high enough, and just got stopped out. So again, hope you guys enjoyed this video. Stay tuned to the next one. It's going to be awesome, and see you guys in the next one. Peace.